What's up, everybody? I was watching a video that was featuring some guy named Bill Holter, I think. His first name's Bill, and he's a proponent of gold ownership. And there's a lot of interviews on YouTube right now, and it's kind of like you click on one, and it becomes a rabbit hole of recommendations after recommendations that feature this guy. Now, Bill Holter has been talking about owning gold for, at least as far as YouTube history is concerned, I think the last 9 years or so. And he's always talking about or at least appears to always be talking about a financial collapse and how you're going to lose your arm and a leg. And I saw a video today that actually made me want to look this up. Now I'm gonna be reading this entire thing from Grok in just a moment, and I'm hoping that there's an expert out there that can either verify whether what I'm about to read to you is true or false. But the short of it is that during a financial collapse, you're going to have your brokerages and your banks essentially bailing in your money because your money will be used to bail them out, against your will, and they're going to essentially steal your money. And I had to go and look this up because I was kind of confused because if you go to apply for, any form of welfare or anything, they want to know what you, the taxpayer, own. If you go to when you go to report things on your taxes, they want to know what you own. That the phrase here is you own. So if I were to say that based on whatever law is supposedly out there that these assets are not mine, wouldn't the government consider that would not the government consider that to be perjury, because the money was supposed to be my bank account, right? So I'm confused about this. I'm majorly confused. So whatever title you read, whatever I decided on at that point, it's really just I'll say it's a measure of clickbait, because I want to attract people to this video, and I want to start a conversation about what does the law actually say regarding what Bill Holter was talking about. And before I get started, here's another thing. If and this goes out to characters like Bill Holter. So if you know that gold is worth more than the US dollar, how come you're trying to sell a gold-based service? Like, wouldn't you be better off keeping that gold to yourself? If I have gold, there's things you have to be aware of. First of all, gold is a commodity; it's not a stock. So any capital gains you have on that gold, by converting it from dollars to gold, back to dollars, whatever, you're gonna owe. I think the tax is 28%. Capital gains goes to the federal government. So the thing is that, so if I have gold, also, from what I heard, you also pay a fee to own gold. So if you have a brick of gold sitting there doing nothing, not only is it doing nothing, so you're just resting your hopes on the gold rising in value so you gain more money, right? But then on top of that, you have to pay a fee to the government on top of the capital gains taxes to own precious metals. So I don't think that's so for a gold-based stock. So I just want you to ask yourself these questions, because really, I'm just trying to start this conversation. So let's get started reading this. So I asked Grok, is it true that legally speaking, so this was according to Bill Holter, is it true that legally speaking, the stocks I bought and store on Schwab isn't mine, but are open for bail in the case of a financial collapse? So Grok searched 25 pages, and this is what it reads. The question of whether stocks held at Charles Schwab are legally yours and whether they are subject to a quote-unquote bail-in during a financial collapse involves understanding both the legal ownership of securities and the mechanics of bail-ins. Let's break it down clearly. 1. Legal ownership of stocks at Schwab. Yes, the stocks you purchase and hold in a Schwab brokerage account are legally yours. So far, it looks like Bill Holter is lying. When I call it fear, PORN. I don't know if I can say that word, but so far it looks like these gold shillers are guilty of fear, PORN, in order to get clickbaited on YouTube the way I was. Let's continue. When you buy stocks through Schwab, they act as a custodian holding the securities on your behalf in quote-unquote street name registered the Schwab's nominee name for operational efficiency. However, you remain the beneficial owner, meaning you have all the rights associated with ownership, such as receiving dividends, voting rights, and the ability to sell the shares. SEC Customer Protection Rule, Rule 15C 3-3. This regulation requires broker-dealers like Schwab to segregate client assets, stocks, bonds, ETFs, etc., from the firm's own assets. They are not on their balance sheet. They're not. That's what Bill Holter said in a video that I just got done watching. He said that this is on their balance sheet. That's a lie. Now, we're gonna look at how to clarify this point later. Your fully paid securities are held separately at third-party depositories such as the Depository Trust Company, DTC, or Bank of New York, and cannot be used by Schwab to finance its proprietary business. This segregation ensures that your securities remain yours even if Schwab faces financial difficulties. SIPC protection. In the unlikely event that Schwab goes bankrupt and the client assets are missing due to fraud or mismanagement, the Securities Investor Protection Corporation, SIPC, provides coverage up to $500,000 per customer, including up to $250,000 for cash. Schwab also carries additional private insurance through Lloyd's of London for further protection. Practical implication. If Schwab were to fail, your stocks would typically be transferred to another brokerage in an orderly process as overseen by regulators like FINRA and the SEC. Let's take a pause for a moment. Do you remember what happened to TD Ameritrade? Because that's why I have a Schwab account, because I never wanted Schwab just because of the association with the name. It just made me uncomfortable. So my TD Ameritrade assets were not taken by TD Ameritrade in order to bail themselves out. They were transferred to Schwab, again highlighting the lie of that gold proponents are talking about. All right, let's continue. Your ownership is not affected unless there's evidence of missing assets, which is rare due to regulatory oversight. Caveat. Now here's the part where Bill Holter was telling the truth. While your stocks are legally yours, if you hold uninvested cash in your Schwab account above the FDIC insured limit of $250,000, that cash would be at risk in a bankruptcy scenario through SIPC coverage would apply up to the $250,000 cash limit. To mitigate this, you can invest excess cash in securities like treasury bills or money market funds, which are held as client assets, not the institutions, client assets. Number 2, bail-in risks and stocks. A bail-in is a resolution mechanism where a failing financial institution restructures its debts. You're talking about the banks, by the way, not brokerages, because I could have sworn Bill Holter mentioned brokerages. By converting certain liabilities like unsecured debt or deposits above insured limits. Thankfully, I'm broke, so I don't have to worry about this. Into equity or writing them off to absorb losses. This contrasts with a bailout where external parties, e.g. taxpayers, rescue the institution. Are stocks subject to bail-in? Generally, stocks held in a brokerage account are not subject to a bail-in because they are client assets, not liabilities of the brokerage or its banking arm. A bail-in typically targets unsecured creditors, e.g. bondholders, depositors with balances exceeding insured limits, e.g. over $250,000 in the U.S. under FDIC, other debt instruments held by the institution. Your stocks as segregated client assets are not part of Schwab's balance sheet liabilities. I have Schwab, so I'm just using this as an example, and are protected from being used to capitalize the firm in a bail-in scenario. Schwab's banking arm. Schwab operates both a brokerage, Charles Schwab & Co. Inc., and a bank, Charles Schwab Bank. The bank holds client cash deposits and is subject to banking regulations, including potential bail-in risks for uninsured deposits, cash above $250,000. E.g., get your money out of the banks. Have cash or invest the cash or get the gold Get metals, whatever, get crypto, and take the crypto offline and put it in a wallet. All right. However, brokerage assets, stocks, ETFs, etc., are held by the broker-dealer, which is separate from the bank's balance sheet. Even in a financial collapse, the brokerage client securities are not pooled with bank liabilities for bail-in purposes. Dodd-Frank and the bail-ins. The Dodd-Frank Act 2010 in the U.S. allows for bail-ins as a resolution tool for systemically important financial institutions, but this applies to bank holding companies and their liabilities, not to client-owned securities and a brokerage. Schwab's brokerage is not classified as a systemically important financial institution, reducing the likelihood of a bail-in scenario affecting client assets. Risks in a financial collapse. While your stocks are legally protected from a bail-in, there are other considerations for a broader financial collapse. 1. Brokerage failure. If Schwab were to go bankrupt, your stocks are protected by segregation and SIPC coverage as noted above. However, there could be short-term disruptions, e.g. delays in accessing your account, which Bill Holter did mention, or transferring assets to another broker. Market risk. In a financial collapse, the value of your stocks would plummet due to market dynamics, independent of Schwab's stability. This is a risk of stock ownership, not a legal or bail-in issue. Systemic risk. If a collapse is severe enough to affect major custodians like the DTC or clearinghouses, there could be broader market disruptions. However, this is an extreme scenario, and regulators would likely intervene to stabilize the system as seen in 2008. Physical certificates. A post on X suggested that stocks held in street name could become common property in a bankruptcy. This is inaccurate under U.S. law due to the customer protection rule. Holding physical stock certificates, direct registration, avoids street name risks, but is impractical for most investors due to trading and safekeeping challenges. Schwab's financial stability. Schwab is a major financial institution with $10.1 trillion in client assets and a strong liquidity position. In 2023, amid regional bank concerns, Schwab emphasized its access to over $100 billion in liquidity and a low loan-to-deposit ratio. While it faced unrealized bond losses like many banks, these are held to maturity portfolios, meaning they don't need to be sold at a loss unless liquidity demands arise, which Schwab has stated is unlikely. Its diversified revenue streams and conservative management further reduce the risk of collapse. Conclusion: your stocks are yours. Legally, the stocks you own through Schwab are yours, protected by SEC rules and held separately from Schwab's assets. They are not subject to a bail-in because they are not liabilities of Schwab or its bank. Bail-in risk. Bail-ins could theoretically affect uninsured cash deposits in Schwab's bank, not uninsured cash in your brokerage account, Schwab's bank, which I don't use. And that's above $250,000, but not your stocks, ETFs, or other securities in the brokerage. Practical steps. Keep uninvested cash below $250,000 or invested in securities like T-bills or money market funds to avoid deposit-related risks. Diversify across brokerages if you're concerned about systemic risk through Schwab's size and oversight. Make it a low-risk custodian. Monitor market conditions such as stock values could be affected by a financial collapse. The claim that your stocks aren't yours or are open to a bail-in is not supported by U.S. securities law or Schwab's structure. While no investment is entirely risk-free, your ownership of stocks is well protected under current regulations. And it has, if you like for me to dig deeper. So there you have it. So would Bill Holter like to describe this? Would his fans like to describe this? So I just want to make this video to highlight this. And if I do find the video, I will link the video and the timestamps below. But most of the time when I lose track of a video through the using the Brave browser, I usually end up losing track of it. It usually doesn't get recommended twice. So this is what I wanted to highlight. For people who are concerned about the things that Bill Holter's saying, take a deep breath. Pull cash out of your banks. I'm not sure about credit unions, but get cash on the side, paper. Get the paper, put the paper away, get the get your gold or silver if you can afford it. For to the best of my knowledge, most people can't even afford a brick of gold, because I don't have $3,300, which is gold's current price. I don't have $3,300 to buy gold. So, I don't know if you do either, but if you're concerned about losing your cash, withdraw it from the bank. And they can't take what was never there. So that's all I have to say for you guys today. Bill Holter must be talking to rich people, and I'm not rich. So, you don't really have to worry much about a bailout. But, make sure you go ahead and, just take steps to protect yourself. Have a good one.